Let's just cover a quick couple things. Monday, keep in mind Martin Luther King Jr. Day. Markets will be closed, so we have a long weekend coming in here. Also, I will be in Vancouver. I see several requests. I will be meeting up with a bunch of you guys Sunday, Monday, down there in Vancouver. Here I am at the Cambridge House doing the Vancouver Resource and Investment Conference. I'll be talking about, obviously, asset revesting. But anyways, if you want to meet up and join, maybe go for a drink or something like that, let's send me an email and we'll go from there. Also, let's take a look at the markets where I think we are from a complacency standpoint. I do believe we're in this complacency move. We have been seeing, I finally feel like we're getting to this point where people are moving into, I always use ARK ETF just because it's like the signature move of general public piling into fast moving things that want to get growth, and it's gone through the whole cycle, but everybody's piling into the markets. People are getting really bullish. You see Tom Lee talking about the stock market continuing to move up. It's funny, we go through waves of all these big investors. Cathie Wood, ARK Investments was like the ultimate back during COVID. She made a couple big calls, started a whole bunch of funds, got everybody pumped, and made everybody a ton of money. Those who didn't get out ended up losing all their money. And that's how she kind of got her big fame. And now we've got Tom Lee coming out with all his stuff and his big predictions. He's had some really big calls. And now he's got this bullish space. But it's sucking the market in. I think we're starting to see all of this complacency. People piling into the markets. People are getting super bullish, expecting higher things, and the economic numbers. Everybody's saying they're getting stronger. The economy is good. Yeah, maybe the numbers are getting a little better, but can you even trust the numbers? I go based on feel and what other assets are doing and other businesses are doing, and in the grand scheme of things. To me, things are stalling out, and yet people are getting more and more excited and bullish on the markets. Again, we got Trump inauguration on Monday. It's very interesting to see how things unfold. There could be like a Trump bump, a pop in price when he gets in. But overall, it is going to be a wild, I think, second half of January. And seasonality-wise, January is all over the place. So we'll see how all that unfolds. Also, one quick thing. We had one of our members mention a comment, ask a question this morning, or yesterday, I guess it was, last night, wondering about, I mentioned about the housing market, how interest rates going up, how it could hurt the housing market. And he's wondering if it'll just create the lock-in effect, which I believe he means people just don't want to sell. They're just going to stay in their homes. Yes, I think it could keep people locked in, especially in the States, because you got these long mortgages that last forever. But in Canada and the rest of the world, a lot of people don't have mortgages locked in. We've got them in for 3 years, which are up for renewal over the past year already. The 5-year coming up, which is the most popular. But the reality is, even in the States, I mean, everybody almost, the general masses always buy more than they can afford. They always push their limits. They buy the house at the upper end of the range, and they're usually not good with money. And eventually when business slows, economy slows, people lose jobs, or one of the spouses loses a job. Eventually money gets tight and people have to sell their homes. It has nothing really to do, like the whole lock-in. Some people, the fortunate people, will be able to just lock in and say, I'm just staying in this house, I'll ride it out for the long run. But the majority of people go broke, they need money, they have to sell, they don't understand finances, they panic, they sell when they don't even probably need to. That's just because most people are undereducated in finance and crunching numbers and figuring out the long-term game of what is best for them. They just more so panic. So I believe higher interest rates generally brings home prices down because people can't afford as much of a house. And of course, when things come up for renewal, it's super expensive to buy a house because of the mortgage payments. So the house price has to come down to counter. So I believe higher rates hurts housing, and the fortunate can just lock in and ride it out. But unfortunately, the majority of people don't know how to do finances, and they're always overextended with mortgages and credit card debt and all of that stuff, unfortunately, and the masses pull the markets down. All right, let's take a look at the charts for today. If we take a look, equities are trading higher. We have the Russell up 0.8%, the Dow up half, S&P 500 up 0.6, the NASDAQ up almost 1%. So we're seeing a pop back up. If we take a look at the daily chart here, yesterday we ended up seeing the stock market run up and then eventually sold back down. Today, we're going to see it gap higher. If we take a look on the 30-minute chart here, we are going to see kind of what we're talking about. We have a big gap through here. So we got this gap window. It's created what looks to be a little island top. Where are we at? We're at 2144. 2144. So we're going to gap right back up into these highs where it got sold into yesterday at the open. It opened higher yesterday and then sold down. We'll see how this goes. Again, not a big fan of something gapping up into resistance in a downtrend. When the bars are red, we are in a downtrend. We'll probably, from the looks of it, see our FOMO indicator spike, people carrying through, buying in and anticipating this market to go higher. This gap could get sold into, and who knows? I do think we'll eventually go lower, but keep in mind, eventually one of these downward moves, if we take a look at the daily chart, eventually one of these, if this trend is going to turn up, is going to break, and we'll have that impulse move, and then that first pause and pullback in the market could turn into an opportunity and regenerate a new trigger to go long. So again, we're on the sidelines because the market is neutral. When we take a look at the QQQ chart, we have we hit target 1, target 2 on it with our ACS strategy, and now we're just kind of in limbo, figuring out, is this market going to extend and start to go higher when we ride the next run higher with the Trump bump or whatever's going to happen? I believe there is about 11% upside in the QQQ. Also means the SP 500 will rally. Again, a rising tide is going to lift all boats. Just the QQQ, I think, has potential for more percentage gain. Or is this market going to break down and we're going to have a very sharp lag, see panic selling and the VIX and everything spike up, and potentially see the dollar go higher? We'll see how, and potentially gold could move higher when we see some of this fear. So let's take a look at the rest of the markets real quick here. If we take a look where else money is flowing, we are seeing bonds move higher this morning. They have gone into this short-term oversold level. It just strings to the downside, has a bounce, and that's where we are now. We're just kind of in this oversold market condition. We're starting to see bonds have a bounce. We've seen the bounce happen before. Again, natural bias here is just oversold having a bounce. You can see our short-term trend is red. We got these red lines are coming up to the 20-day, so it might be struggling today. A good chunk of that has to do, you take a look at the 10-year, we're seeing the yield, the note fall here. And of course, falling rates means bonds are going to go higher. But it is interesting, if we look at the 10-year, we actually have the 10-year moving, just getting close to the 20-day and giving us this lime green saying, hey, the interest rates are oversold. And they're going to gap lower this morning. This is only regular trading hours, this 30-minute chart. So we're going to see a gap down below this short-term support level. Again, bonds are going to gap above resistance. So it'll be very interesting to see how these react. If we're going to have a trend reversal, or if in terms of interest rates popping and going back up and then bonds sell off. So expect some volatility, but again, we are kind of more or less on the sidelines, letting the markets kind of chop around and figure out a direction before we really get into something that can really move and push our accounts higher in value. If we take a look at gold is down 0.4% this morning. It's had a really nice pop. We have been neutral to bullish. Simply, we have a pause, rally, pause, rally, pause. Again, there is potential for gold to want to hold its value and keep going higher. This is what we've been talking about for a long time. We expected this target, and then after that, the gold should hold its value or drift higher as the stock market starts to stall out. Potentially, even if the stock market goes even higher, we could see gold continue to push up as that defensive play as well. We are seeing the dollar move up this morning. It's starting to move up a little bit. It's had a nice bounce, a little sell-off the other day into the 20-day moving average, which is this pink line, and it's trying to hold its ground here to potentially pop and push higher, which if rates go up, bonds go down, we could see the stock market sell off and see the dollar continue to push higher. It is in an uptrend, while the stock market is in a downtrend at this point. If we take a look over at energy real quick, oil down about 0.5%. It looks like it's potentially putting a little bit of a top here. I think it's had a pretty good short squeeze. It's also had a couple bouts of news that help juice things up. So anybody who is short anticipating a big breakdown, which we've been looking for, once we see, I think, oil break down below this level, energy stocks are going to get hit real hard. The economy, there'll be some pretty big moves in the market. But right now it's having a big short squeeze and moving up. And again, we're just letting it work itself out. I think not much to do in that space at this point. Other than that, let's take a look over at silver real quick. Silver's down about 2%, pulling back. Silver, again, it's kind of in that choppy pause mode. Usually I like to look at gold or large cap gold stocks like the GDX as a gauge for the precious metal direction. Silver and silver miners are kind of volatile all over the place. Very hard to chart, a lot like natural gas, all over the place. So usually I use the base, the gold, use gold as the overall barometer of what's going on, and then expect silver and miners to be a lot noisier and messier in general. Other than that, if we take a look at the hot list, we still have a lot of the aggressive things at the top, telling us that we're in that complacency mode. When we take a look at this chart with that complacency, this is everybody's piling into the really aggressive stuff because they feel like, hey, markets are going higher, all of that stuff. Well, you know, the ARK, any of the ARK ETFs, we got 3 of them up in the upper quadrant. So people are piling into those sectors. You got Bitcoin, you got energy exploration stocks, which are high risk, big volatile. They've had a really strong rip to the upside. The energy space is XLE, OIH, which is oil, Hack has moved up, which is the cybersecurity, semiconductors. Again, so we've got a lot of stuff going on. It is interesting. Semiconductors have been really dead, really just trading sideways, trying to figure out what they're going to do. If we take a look at the bots ETF, it has really, struggled. It really hasn't made much new highs. It's kind of stalled out. I feel like the AI bubble is kind of fizzled out. Let's take a look over at the NVIDIA chart here. Take a look at NVIDIA. It definitely has got some short-term weakness. It came right up to this previous high and then got sold off in a huge way with big volume, and it's kind of under pressure. This is usually a topping candle. Usually we're going to see it sell off, which we have, and we'll see how that goes. But when we zoom out again, it really has just traded sideways, and it's not a good sign. It should be leading the way, and it's not. And that is, I think, a warning indicator that maybe that space is stalled out. We'll see what other sectors kind of come to life. But if the NVIDIA / semiconductors don't follow suit and start to kick into high gear, if they start to go down, it's going to pull the whole market down with it. Anyways, that's about it. And we'll see how the day unfolds. So keep in mind, markets are closed Monday, so enjoy the long weekend. And I'll be heading out shortly with my son to go powder snowboarding. Skipping the morning of school. We got fresh powder, so hitting the hills and hitting the trees. All right. Well, not hitting the trees, going through the trees. All right. Cheers.